The bears are all over Dalal Street. The Sensex slumps to its lowest level in 15 months as markets tumble for the 6th straight session. The Nifty drops below 7,600. The Midcaps take a beating.
Rupee slides to its lowest level in 2 years against the dollar, moves closer to 67 as demand for the Greenback remains robust among corporates and importers.
European markets rise even as stocks in Shanghai continue to sell off. Oil prices tumble yet again. Brent's now well below $50 a barrel.
We are considering the question as to how the customers must be compensated for call drops.
Right.
And
so you've made up your mind that they...
Call drops could soon burn the pockets of telecom companies. The new TRAI chief R.S. Sharma says telcos must compensate customers, dismisses lack of spectrum or towers as the reason for call drops.
One rank, one pension will not put the 3.9% fiscal deficit target under threat. Government sources say 20,000 crore rupees cushion in the budget will take care of that expense. That's an exclusive.
The Prime Minister will meet India tomorrow to take stock of the current global economic turbulence. The who's who of industry, including Mukesh Ambani, Cyrus Mistry, among others, likely to be in attendance. The Finance Minister meets top two bankers, Chanda Kochhar and SBI Chief Arundhati Bhattacharya, ahead of the meeting.
The Met Department sticks to its monsoon forecast amid conflicting reports, says rainfall has been 14% below normal so far but remains it will have minimal impact on agriculture.
Rahul Gandhi may not be elevated as the Congress party president just yet. Sources say members within the party's working committee want Sonia Gandhi to stay in the top job.
It's almost a perfect storm in the global economy. I mean, China has gone wrong. America is now raising rates. So what do you do? Europe is kind of struggling. Commodity prices slumping at a very rapid pace.
Their sole reason to buy is the bet that rates come down, which I think is a reasonable bet to take. If that were to happen, this market won't fall as much or might give you moderate returns over fixed income.
The pockets of earnings that we are seeing which are durable in nature are say out of mid-cap pharma, IT, mid-sized IT companies. I think we see decent amount of growth out of NBFC.
So Maruti, Aishan and Britannia, all three are part of that class where we wouldn't have been able to buy them earlier given the valuations, given that a lot of PE re-rating was already happening.
How do you position your portfolio and investment? That's a key challenge. Maybe when there is too much of activity outside, you have to remain very calm.
Well, a new week but no respite. The bears continue to rule the roost on Dalal Street. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nantara. Almost all the gains that we saw being wiped out today.
In fact, since Narendra Modi came into power, most of those gains have gone. So I'm wearing the color of the day, the color of last week as well.
Well, that is right. It is red across our screens and there are no signs of any revival. Many market watchers believe that the sell-off may not be over just yet. That is, of course, our top story tonight. As we pointed out, the bears have tightened their grip on Dalal Street as the bulls continue to run for cover. Yet another late sell-off caught investors off guard as the market ended with losses for the 6th straight session. Now, the Sensex has lost over 300 points today, ending at its lowest level in 15 months. The index is now below 25,000. The Nifty lost nearly 100 points to break below the 7,600 mark for the first time in 14 months. And just to put things in perspective, as Nantara was pointing out, the Nifty has now lost 17% from its highest level in 2015, and the Bank Nifty has lost nearly 25%. So that's really been taking a beating, especially over the last 2 weeks or so. Anuj is here now to wrap up the day's highlight for us. Anuj, you're at the Motilal Oswal conference meeting with investors, but what a bad day today for the bulls.
Extremely bad day for the markets today, for the bulls that is. The start was quite okay, but after 1 hour it started to look like the distribution phase was going on. The Sensex and Nifty were stable, but mid-caps were correcting quite a bit, and in last hour of trade there was significant damage to stock prices, even in the large caps. Today was an extremely bad day, rank bad day. A lot of mid-caps got severely punished, a lot of non-index, high-quality blue-chip stocks got significantly punished. Let's talk about stocks then. Banks led from front again. ICICI Bank, Axis Bank, Bank of Baroda, all lower. High beta stocks like metals under pressure, NMDC, Hindalco, Vedanta, all were lower. The bluest of blue chips in terms of FII favorite stocks, Asian Paints, Bosch, Coal India, all of them were succumbing to selling pressure. But the real damage was outside the index. Starting with pharma first, stocks like Wockhardt, TRAI, Divi's Labs, all of them were lower in trade today. Not just that, Bharat Forge, Motherson Sumi, SRF, TVS Motors, Mindtree, Adani Port. So it was telling you the kind of damage that existed in the mid-cap and the non-index large-cap space today. Whichever way you look at it, it was a bad day. The only solace was that all of this came on back of extremely low volume. So right now, it's more of a buyer strike than anything else. But that would be, as I said, a little solace to the bulls.
Turned out to be a bloody Monday for Dalal. Thanks, Dalal, for joining us. With that, let's get an expert voice. Now, the band-aids from the 2008 financial crisis are coming off. The wounds haven't really healed. That's the word from Shankar Sharma of First Global. However, he does add that macroeconomic fundamentals remain strong.
India's sole reason to buy is the bet that rates come down, which I think is a reasonable bet to take. If that were to happen, this market won't fall as much or might give you moderate returns over fixed income. That's about the best call you can take on India right now. Because the global situation is terrible and nothing got resolved post 2008, as we all know. We kind of just papered over the problems, they put band-aid over them, but they've all been festering, underneath. They're all coming back to haunt us. I think emerging markets have a 20% downside. India has probably a 10% downside because India will definitely be more resilient. I don't think you should bet on huge upside, for any global market within India. Again, Indians tend to believe India belongs to some other planet, and Indian markets will march to their own tune, and Indian economy will march to a completely different tune, and we'll grow 10%. Rest of the world can grow 2% or 5%. It doesn't matter. I mean, unfortunately, that's not reality. We are still average market, an average country. We will still come out okay because national balance sheet is in good shape. And it's been left in good shape, and the current account for whatever it is worth is still 1.5% we can live with. So we won't have a macroeconomic crisis.
Well, that's Shankar Sharma saying that emerging markets, that story is old hat now, and emerging markets will see about a 20% correction, but India better positioned and better poised in the emerging market basket. We're not decoupled, but we'll probably see only a 10% correction from these current levels. We'll get you more of Shankar Sharma, but that's coming up for you in just a bit. On to the money markets, where the rupee is tumbling against the dollar, and it's hit a fresh 2-year low, now closer to the 67 mark against the greenback. Lata joins us now to take us through the currency action. Lata, with the equity markets continuing to be volatile, look at where the rupee is, 66.82 today.
The rupee is expected to be under pressure, and today for the same reasons that emerging market equities and emerging market currencies were under pressure. One could see it from the word go. There was a bit of wobbliness in several Asian currencies, and the rupee, although it has lost about 0.5% by end of day today, was actually an outperformer. Several currencies like the lire have performed even worse than the Indian rupee. The equity markets tumbling sentimentally impacted the rupee market, and there was actual demand as well. Dealers were telling us that FIIs were coming and buying dollars, so literally selling equities and taking the dollars home. And there may have been RBI supply at higher levels. It's always difficult to confirm. Some people thought that PSU banks were offering, but public sector banks could always be offering because there is a trading opportunity or because exporters were selling through them. But it looked like between that, above that 66.80 level, there seemed to be some supply of dollars available. This is by no means the lowest that the rupee might see, with the FOMC likely to announce a rate hike according to maybe 30% of the market or 40% of the market. The fear always remains that in the event of a rate hike, emerging market currencies, bonds and equities might wobble yet again. So ahead of that, there is a lot of quitting of emerging market assets by FIIs, and that might continue up until 17th and who knows, even beyond. So clearly you can't call the bottom of the rupee just yet. A lot of people believe that between 66.25 and 67.25 is the near-term range for the rupee. But what is important to note is that from recent highs, while the stock markets have fallen 20%, the rupee from recent highs, say from year-ago highs, when the Modi government got elected, the fall has been something like 14-15%. And if you compare from 2-year levels, the taper tantrum levels, the rupee is actually stronger, whereas the equity markets are way weaker than their near-term highs. So compared to other currencies as well as compared to equities itself, the rupee will remain an outperformer, though it will be under pressure.
Thanks, Alaka, for joining us with that analysis. Rupee making a fresh 2-year low, and there may be more pain left in store for us on Mint Street. Let's talk about global markets now. Stocks in China continued their sell-off, and that had a rub-off on most Asian markets. Japan, after having a losing streak through most of last week, turned out to be the only exception. Sri Jagaraja wraps up all the action from the Asian equity markets.
Asian stock markets largely subdued this Monday, lacking clear direction as Shanghai shares dipped in and out of the red after the Chinese markets resumed trading following a 4-day-long weekend. Japan's Nikkei was down by 0.1%, but closed relatively stable at 0.4% to the good. Shanghai shares initially rose as much as 1.8% following remarks over the weekend by regulators aimed at calming the market. Australian shares pared daily losses to close down 0.2%, with gains in healthcare and utilities helping offset slides by banks and miners. Meanwhile, the Kospi edged down in choppy trading on continued foreign selling in local stocks. Foreigners were net sellers for the 23rd consecutive session. That's the longest such streak since July 2008.
Another bad day for Shanghai Composite, down by almost 2.5%. But that sell-off in China had little impact in Europe today. Stocks have ended the day in the green. However, they did come under pressure mid-session and gained most of the early morning gains. But even then, they managed to clock some healthy gains. You look at the British FTSE up by about 0.5%. German DAX also having a pretty good day in trade, up by 70 points. French CAC up by 0.6%. And of course, markets in the US are shut today. Let's look at the commodity markets. First up, crude. China did impact crude oil prices today. China had actually revised its 2014 GDP lower from 7.4% to 7.3%. Your Brent at $47.71 a barrel, whereas NYMEX at under $45 a barrel. Volumes are thin as the US markets are shut.
Well, let's head to the big story back home. Call drops will soon start to pinch the pockets of telecom companies. R.S. Sharma, the new chairman of the TRAI, has made a categorical statement that telcos will have to compensate customers for call drops. In an exclusive chat with CNBC-TV18's Malvika Jain, Sharma dismissed the lack of spectrum or towers as a reason for call drops. Mincing no words, the new TRAI chief has asked telcos to be more honest with their customers. Listen in.
We are, in the consultation paper that we have brought out, we are saying that wherever you have a minute plan, then you should not charge for the part minute.
Right.
So therefore, in that sense, that gets, kind of compensated in the process.
So, Mr. Sharma, you also want to identify the cause of call drops before actually providing these credits or compensation to the customer in case of a call drop. Is that correct?
No, that's not correct. What we are doing is that we have brought out a consultation paper where we are considering the question as to how the customers must be compensated for call drops.
Right.
And there
so you've made up your mind that they must be compensated.
Yes, that's right. That's the premise on which the consultation paper begins. We are not asking the question whether they should be compensated or not. We are saying they should be compensated. Okay. But we are saying what should be the methods of compensation. That's part one. Secondly, we are also bringing out a study in the next 2 weeks or so where we are analyzing the call quality. And this will be quality of service, which will also include call drops as one of the sort of parts. But there are situations where I am dialing you and I am not able to get anybody, so I am not able to even connect the calls because of various reasons. So we are bringing out that paper. There we are slicing and dicing the reasons for these quality of services, whether it is an inadequacy of towers, whether it is some other issue. That's what we are doing.
So, but the thing is that while quality of service is an issue that you are looking into, there are some standards which have already been set by the TRAI. In the first quarter, the study that has been conducted by the TRAI, and in the months of June and July, the call drop study, particularly in circles of Delhi and Mumbai, have indicated that most companies are actually not meeting those service standards. So do you think that in the past this issue has absolutely been neglected, and that is why we have reached this stage where we have?
No, my sense is that we are, having this call drop is becoming a very serious problem, and it's becoming worse and worse. And therefore, whether we have paid attention in the past or not, that's not the issue. The issue is currently it's a very serious problem, and therefore we have to do something about it.
Sir, but the TRAI in the consultation paper also says that lack of investment in infrastructure is one of the main reasons why we are seeing call drops. And this assertion has also been confirmed by an internal study that has been conducted by the government. And DOT has actually found that because telecom companies are investing more in 4G infrastructure, 2G infrastructure is getting neglected. Because of which you are witnessing call drops. But sir, can the government or the regulator actually force telecom companies to invest in particular type of infrastructure? I mean, if they see a business case in 4G, definitely they are going to go and invest in 4G.
Yeah, I am not saying that they should invest or they should invest a particular type. I am only saying that once you have contracted to discharge certain functions, you should be honest to those commitments. And if you have, if you've got those customers who have taken your service on the presumption that you will provide them a quality service, then you will be less than honest with those customers if you don't really provide that service. So that's the simple point TRAI is trying to make. And if you are not able to provide the service, there should be some way for the customers to be compensated.
There is a proposal that you would be asking telecom companies to periodically disclose their network capacities and also steps that they have taken to optimize the network.
If you have a bus which is 24-seater,
right,
and if you put in all 100 people, then obviously the people are going to be inconvenienced, and the quality of service which you want to give and which you are contracted to give will not be able to be provided. And therefore, it is necessary for the TRAI to know as to what your capacities are. And in any case, my view is that this study which we are conducting will be bringing out as to the potential causes of call drops, and capacity could be one of them.
But to what extent do you think it's a non-availability of adequate amount of spectrum that is causing this problem?
The same spectrum was available in the last couple of years.
Right.
The spectrum has become more available in the last few months. So spectrum has not shrunk.
Because there has been growth in data penetration.
I agree with you. That's what I'm saying. So basically what is happening is, yes, there is a growth in, that's the normal growth in customers, there is a growth in data. So now what is required is that we should put in the appropriate infrastructure. Spectrum is not the only resource. There are other infrastructural resources which have to be supplemented in order to leverage and utilize this. The issue of call drops has become very, very serious, and the service levels have become certainly very unacceptable.
Big headline from that interview with the new TRAI chairman: companies are not purposely engaging in call drops, but they will have to compensate consumers if this menace continues. And I know that if it's taken care of, Shireen is going to be very, very happy. It's the #1 excuse her team apparently makes for not being able to get in touch with her.
Well, that is right, Nandara. Thank you very much. Thank you very much for expressing what I go through every day. Where you guys can't get through, call is
It's our fault.
All right, now what do the telcos have to say in their defense? Akhil Gupta of Bharti Enterprises, who was at the Motilal Oswal 11th Annual Investor Conference, says capacity constraint is the biggest reason for call drops. The regulator is not buying it.
I think call drops, as all operators have said, are due to some capacity constraints in some main cities, for which all operators are committed to optimizing and putting capex. But a bigger problem, or an equally big problem, is in terms of difficulties in getting sites. As you know, as the traffic increases and the spectrum is limited, you have to put more and more sites. and sites are becoming a problem.
Well, that's Akhil Gupta there, Bharti Airtel, India's largest telecom operator, talking about capacity constraints which are impacting the quality of service. To talk more about the issue of call drops and who's to blame and what the road ahead can look like, we're now joined by Rajan Matthews, the Director General of the Cellular Operators Association of India. Rajan, appreciate you joining us here on CNBC-TV18. You heard what the telecom regulator, Mr. R.S. Sharma, had to tell CNBC-TV18. He's absolutely clear, unequivocally saying very categorically that telecom service providers will need to compensate consumers for call drops. We'll figure out why later, but compensation must be provided. How do you respond to that?
So, first of all, if there is some form of economic harm that is alleged and that can be shown to have happened to the consumer, fine, those are matters that we can consider. But I think the fundamental issue is that let's focus our attention on solving the problem. Compensating and penalizing and all of these are not going to immediately address the issue of call drops and the issue of the satisfaction of the consumer. And I think in that particular situation, Sharon, we need to understand that this is a matter that happens along with both the consumer, the government, as well as with the operators. We have a combined responsibility on this.
All right, you're saying you have a combined responsibility. We're talking about call drops, but incidentally, the power is dropped there at Rajan Matthews' residence, but we're hoping that it will be back up. But I'm going to ask my question nevertheless, hoping that the power will be back up. Rajan, respond to the regulator's comments there, saying that they would like you to disclose the kind of capacities that you have, the kind of investments that you've made in capacity expansion. A very logical argument being made by the regulator that if you have a bus that has a capacity of only 100 people and you keep putting more people there, you're obviously going to deteriorate the quality as far as those 100 people are concerned and inconvenience them. Why is the COAI saying that they would not like to disclose information or details as far as capacity is concerned?
So, first of all, you know, capacity is a pretty nebulous issue. I think on a very simplistic basis, the problem can be saying is that, yes, if you don't have capacity in your network, that can cause some of the problems. But what is it that causes the capacity constraint? The fundamental issue that causes capacity constraints in our networks are principally two. One is the availability of cell towers to provide coverage, and two, the spectrum bandwidth that is allowed to be given to us to be able to provide the service.
But Rajan, if I can interrupt you, because that point was made by Malvika to the TRAI chief, and he responded saying, hey, this was the spectrum that they had previously as well, and yes, there may be an issue with regards to cellular towers at this point in time, but the regulator is not buying the lack of spectrum or the lack of cell towers argument for the quality of the situation at this point in time.
Shireen, I think the regulator, the chairman, honorable chairman, also made the proposition that we need to look at the data. Yes, we are inferring certain things, but first of all, please understand that globally, this is the fundamental bricks and mortar that we deal with. Cell towers, spectrum, put them together. Now, let me just give you a point that needs to be considered. The incremental amount of spectrum that we got in the last two auctions was minimal. It is only about 5 to or so megahertz per operator. The rest of it was really the operators buying back the 900 and 1800 megahertz spectrum that they already had as a result of the government telling us you have to rebid for this. Why? Because we believe now you'll be able to offer data services and get more revenue and enhance the data program of the government. Please remember what the Honorable Prime Minister has said. He wants to connect 1 billion of our citizens on our data networks. Where are we going? So we've got to put all of this together in terms of addressing the capacity issues that we're talking about.
Okay, so Rajan, where do we go from here? Because clearly, you're going to continue to disagree with what the regulator has to say. The regulator at this point in time has floated a consultation paper. Where do we go from here? Yes, you've had a meeting with the minister. Yes, a national cellular tower policy should be put in place. But the regulator is saying that that is clearly not enough. You're saying compensation and penalization is not the answer. But what about the poor consumer?
So we absolutely agree. So Shireen, when you look at it, the price points that are available to the consumer are one of the lowest anywhere in the world. We have per second billing. All right, in those instances when there is per minute billing, invariably the rate is adjusted to compensate for that. So if in addition the TRAI wants to consider additional adjustments in terms of call time or air time to the consumer, those are things that we can consider in the discussion paper that's out there. So we're not disagreeing with this, but I'm saying please let's not lose focus on the particular issue of call drops. What must we do? And here we thank the Honorable Minister and the DOT Secretary. They've been very proactive in helping us to be able to get towers on government land, in the defense land, in the cantonment areas. And look at just what has happened in the last, Shareen, just let me ask, just point this out. In the last day, I've received a notice from the Delhi municipality asking us to shut down 78 towers. The week before this, they shut down 75 of our towers. Now, please, let me ask this. Where are we going in terms of a dissonance and disconnect between what the municipalities are doing and the risks we are facing in terms of our tower locations?
Okay, so as and when, Rajan Matthew, the tower issue is at least addressed with this national tower policy or by you putting up towers on government land, as has been the case or the discussion with the telecom minister, do you believe we are going to see an improvement as far as the telecom service is concerned?
Absolutely, Shareen, not a question, and I will answer unequivocally. What has happened in the last several months, please understand, is a substantial intervention in our networks. We have just introduced mobile number portability nationally. We have just introduced 3G. We have just introduced 4G. We are continuing to change out spot frequencies that have just been allocated to us as a result of the last auction. Nowhere else in the world will you see so many interventions happening so much at a given period of time and not have these types of experiences. We're aware of it, we're working on it, and we are committing to our consumers that we are absolutely going to make the investments and improve this issue of call drops. Not a question.
All right, you're making that commitment right here on live television. Rajan Matthew, always a pleasure speaking with you. Thanks very much for joining us on CNBC-TV18. And let's hope that the situation does improve as far as the quality of service is concerned. Well, moving on now to the one rank, one pension promise. It will not be a threat to the fist. That is the word coming in from the Finance Ministry. While North Block is still working on the fine print, senior officials have told CNBC-TV18 that they have a 20,000 crore rupee cushion in this year's budget to take care of sudden expenses. Das reports while the fiscal position is comfortable for now, the government will have to cut expenditure and improve revenues to take on the additional burden starting FY17. Listen in. Pension relief to ex-servicemen has come at a cost to the exchequer. The Defence Minister has clearly indicated 12,000 crores may have to be paid as arrears, while 10,000 crores could be the fresh tab which will recur annually starting the current fiscal. But Finance Minister Arun Jaitley has kept a cushion of 20,000 crore rupees ready, at least in this year's budget. Government officials say this amount should be enough to help the government finance the one rank one pension, as well as the 12,000 crore rupee bank recap package announced by the FM in the last Parliament session. The 20,000 crore rupee cushion will ensure that there is no threat to the fisc due to the OROP outgo this year. The area payments for one rank one pension will also be staggered, 12,000 crores to be paid in 4 installments on a 6-month basis. The Finance Minister will seek the Parliament's nod for this unaccounted expense, but it's not necessary as the entire amount will be raised and paid in one shot. According to Nomura, the OROP scheme will not derail the government's fiscal deficit target of 3.9% of GDP in FY16. However, increased pension liabilities, the upcoming 7th Pay Commission hike and higher recapitalization requirements of the public sector banks suggest that continued fiscal consolidation beyond FY16 will require structurally addressing both the expenditure and revenue side of the fiscal balance, unquote. In the change scenario, the Finance Ministry has decided to strictly adhere to its subsidy estimates, budgeted at 2.43 lakh crores in the current fiscal year. With the government making little headway in pushing fertilizer subsidy reforms, officials indicate there is no room to cut subsidies further. However, the government is going ahead with its strategy to front-load. For instance, between April to July this fiscal, out of the budgeted 2.4 lakh crore rupees, the government has spent 86,000 crores on highways, railways and the power sector. At this rate, the government is aiming to utilize the entire plan outlay
by January to February this fiscal, clearly focusing on improving the quality of expenditure to push growth.
So the message from North Block is, at least in the current fiscal, there will be no deviation from the fiscal roadmap, with the government sticking to the 3.9% fiscal deficit target. However, next fiscal could be another story, as the full impact of the 7th Pay Commission, coupled with the recurring impact of OROP, will be felt on the new budget. In New Delhi, Sapna Das.
Right, so the government, or rather the exchequer, not to put out about that extra expense. Tomorrow, the Prime Minister Narendra Modi will meet industry leaders to deliberate on the recent developments in the global economic scenario and the opportunities it presents for India. This will be the Prime Minister's second meeting with representatives of industry associations of chambers in 2 months, and it's being held amid the global market turbulence being caused by the slowing Chinese economy. It also comes as the US prepares to raise interest rates. The agenda for the meeting is recent global events, opportunities for India, other issues plaguing the Indian economy. For example, the goods and services tax may also come up for discussion. Modi had in his first interaction with industry chambers on June 30th and had discussed various grievances, including issues ranging from high capital costs to ease of doing business to certainty on taxation matters. Apart from the who's who of India Inc., RBI Governor Ram Rajan, Niti Aayog Vice Chairman Arvind Panagriya, Chief Economic Advisor Arvind Subramanian will also be attending that meeting. Meanwhile, Finance Minister Arun Jaitley already began the groundwork meeting the top bosses of the country's 2 largest banks, as the largest public and the largest private sector bank. SBI Chairperson Arundhati Bhattacharya and ICICI Bank's MD and CEO Chanda Kochhar met with Arun Jaitley at North Block in what can be seen as a lead-up to the big meeting on Tuesday.
So stay tuned to CNBC-TV18. We'll bring you all the details from that mega meeting right here tomorrow. Till then, from all of us here, goodbye. Thanks for watching.